Welcome to my channel, guys. This is the Financially Fit Farmer. This channel, I educate you guys on everything finance-wise, fitness-wise, as well as farming-wise for those that are interested in farming. And if you are not a part of this, guys, please do subscribe. Please do like this video if it does resonate with you guys. And without wasting any more time, in today's episode, guys, I'm going to be discussing why you should start building your investment portfolio using ETFs and index funds. I'm sure you're wondering what an ETF is and what an index fund is. So an ETF is an exchange trade fund. So what an ETF does is that it tracks an underlying asset. That underlying asset could be anything between shares, it could be bonds, it could be commodities. So that ETF will basically just track the price movement of whatever assets that it is tracking. So I'll give you an example with commodities. So you will get an ETF that tracks the gold price of the gold price. So when the gold price goes up, the ETF will also go up, and when it goes down, the ETF will also go down. And what an index fund is that it tracks an index. So indexes are your groupings of basically companies or industries or geographies. What I mean by that is that you can get an index of the JSE Top 40, which basically comprises of the top 40 shares on the JSE. And you can also get one of the S&P 500, which is the top 500 companies in the USA. So those are your index funds. Okay, now I'm going to discuss with you guys the advantages of starting your portfolio using ETFs as well as index funds. So the first thing about ETFs is that they are passively managed, meaning they don't need a fund manager to basically buy and sell shares on a daily basis. They basically just tracking either gold or an index or anything of the sort. So you're already saving on fees when it comes to that, because that fund does not have to pay a fund manager. Next, it is well diversified, especially if it tracks an index, because an index in its nature is a diversified instrument. And another thing is that with ETFs, it's an easier, simpler decision or analysis to do, as opposed to buying an individual stock in an industry where you'll need a lot more analysis to pick which company outperforms the other company in the long run. So it's easier to start with that and then build a good portfolio with the base of ETFs, either ETFs that track assets or they can even track indexes. It's the same thing. So when it comes to your money, guys, you should not be making gambling decisions. You should definitely sit down and have good reasons to put your money in places where your money will grow. So that's why I wanted you guys to know more about ETFs and index funds, so that when you're constructing your portfolio, it's way easier to start with a base of something which is simple, which is more affordable, and over time it does grow substantially. So that is why I'm advising, or basically encouraging, people to look into your ETFs as well as your index funds when you are building up your portfolio. So that is my video for today. I hope that this video does resonate with all of you guys who are new to the investment world when you are making that decision to invest. See you in the next video.